there is a massive play right now going on in the uranium market. It was brought to my attention. I was like, let me just go look at this. I don't know anything about this, but I just was curious about what's going on. And effectively what it is, there was a fund that was trying to basically corner uranium and drive the price up. And the entire thing about uranium, which was interesting, is, okay, what is it used for? It's used for nuclear reactors. Well, then you spend a little time understanding nuclear reactors, and I was shocked to learn how clean, how safe, how reliable, how repeatable. I had all these stupid cobwebs in my head based on a random couple of press releases, 3 Mile Island, Fukushima, etc. So when I cleared all of that bias away and I learned about it, then I'm like, why aren't nuclear reactors everywhere? Because it is the fastest way for us to get to carbon neutral. And then I find out the same people who want carbon neutral, i.e. Greenpeace, is one of the largest advocates against nuclear. And I thought, how do we not, again, be in a position to actually hold two thoughts that are slightly divergent at the same time? We want nuclear energy because it actually supports something that's even more important to the sustainable ecosystem that Greenpeace is there to protect in the first place.
Hey guys, welcome to the channel Market Uncharted. Today's video we are still talking about uranium. As you can see, Chamath Palihapitiya already discussing about a big play on the uranium sector. This is true and this is important. Uranium has reached mainstream, and this is what we are going to talk about a little bit, about what Chamath said, about the big play in uranium, also more news, more information, not only Sprott's information about some companies that they follow, also the nuclear reactor situation around the world, and we will have a cool video just for you guys. So stick around and I hope you like the video.
Opinion is on him. I mean, this is an individual that basically has access to infinite capital at 0% interest, essentially free money. And he's saying, he says, quote, there is a big play to be made in uranium right now. And he even references, he doesn't say Sprott, but he said there's a billionaire getting involved that is essentially looking to, I forget his exact words, but essentially looking to corner the market. So, I mean, when you see that, I would think your light bulbs are going off and saying, oh, wow, we only need one or two of these guys to realize that, right?
Yeah, it's the first thing I thought actually not only was the unbelievable access to capital that somebody like himself has, but also the social influence. You know, he has 1 million followers on Twitter alone, and so he has huge influence and he has huge access to capital. And I think that's the fact that somebody like him is just now coming to this realization as well, sort of goes to show you that even though in the small world of Twitter, uranium, you know, uranium Twitter, where we all kind of know each other and we talk on a daily basis about these things, it's kind of an echo chamber. And we really feel like, oh, well, it's not a contrarian play anymore. You know, we're already way up off the bottom, et cetera, et cetera. It's like, well, that might be the case, but at the same time, people like Chamath are just right now figuring this out, you know, when it's been an obvious thing for years. And while it's not a contrarian trade in that not everybody hates it anymore, which is how it was, you know, 3 years ago. You were swimming upstream all the time. Now it's a momentum play, and you have the Chamaths of the world, the Larry McDonalds of the world, the Bill Gates of the world. They're behind this, and it's still only a $27 billion market cap. I mean, that's the market cap of Best Buy.
So as we've seen, Chamath understood this play. Bill Gates also with the nuclear reactor in Wyoming. As you've been hearing between Jake Ducey and Hunt about uranium, this is not a hated trade anymore, but still, although it's more mainstream, less hate, not a contrarian play anymore, it's still building itself on a really impressive fundamental bullish case. So that's what we are going to see or continue to see now on moving forward. After the mainstream, let's get back to the fundamentals. And this is really impressive. We have now 54 reactors under construction in the world, especially in China, as we've seen this before. This number, it's not keeping itself up to date because now we have Japan into the play. There is something else out there all across the world. But just to give you a small idea of what's going on right now, this is important. Also, we have the difference between the planned reactor construction and the proposed, because this is also being impressive. It's being updated every week. And again, still about all of these reactors that are coming online the next few years, we still have a sustained deficit. We will still have a sustained deficit on the offer versus a surplus on the demand. And this is important for all of you guys to understand, that we have a declining investment in the uranium exploration that's going to be against an increase of demand by not only China but many countries in the world. And you see the model that here presented by Red Cloud, the model that shows that the supply-demand deficit is going to increase across the next few years until here 2034. So this is a trend that's going to continue. Let's just see a few key thematics driving the sentiment switch, where, as you've seen, Hunt said, the difference between a hated trade and a contrarian trade to a more mainstream. The world's largest economy is committed to carbon neutral by 2050. Electricity growth from electrification of everything. China remains the disruptive. Implications for the small nuclear reactors and advanced reactors. Commodities supercycle and the flight to real assets. Impact of generalist investors and speculators. Geographic imbalance between supply and demand centers, and the opportunity from ESG and decarbonization. And we have even more outstanding dynamics, especially I would point out the COVID impact on the supply versus the limitations of it, and the steady demand growth from China, Russia, etc. And there is many upgrades. Again, guys, a lot of information out there. The fundamentals are getting strong by the day. But just another here upgrading to uranium $60. As we already know, at $60, this is going to be economic importance for many of the producers to put online their production facilities and start producing and delivering uranium. We still at $32, we want to be at $60. This can have an increase of all of our shares around 150%. So the asymmetric trade here is getting huge. The uranium equities, again, this is not financial advice. We have so many uranium equities out there. We have under 70 companies around the world directly related to uranium. This is just some of them. I can tell you my favorite is, of course, Denison Mines, NextGen Energy, and Boss Energy are my top favorite for the next super cycle in uranium. And also this is important because we have a totally money flow on this sector that is getting huger by the day. So the hedge funds already noticed this. So imagine an ocean going down a straw. This is what's going to happen right now. And this is excluding the ETFs and the OTC equities. Okay, this is just the uranium mining related stocks. So imagine the flows on the ETFs that can put these investments into another level. And again, don't forget always about the fundamentals. The nuclear power protects the air quality, delivers less smog, less acid rain. So this is a green energy to help us to do the decarbonization of the world. And also complementing with variable renewable energy. That's something important because we already know the sun, the wind, they don't have the same effect as the uranium and the nuclear energy power. And again, the consumption of or the energy density is really different as well. Just a uranium pellet delivers the same energy density as 1 ton of coal or 120 gallons of oil. So this is just unbelievable, the power of nuclear energy. Just an update of the shareholders meeting about UPC and the buy of Sprott Asset Management. If approved, the agreement is currently anticipated to be completed completed, apologies, by the early third quarter of 2021. So again, despite the fundamentals, despite the mainstream acceptance of uranium, now you have a big player such as Sprott Asset Management into the play that's going to deliver even more price updates to the uranium price. Then you have also the equity research of Sprott that likes the UEX, especially after the revised GCU transaction terms that included Denison participation, which removes the deal risk and still highly assertive to UEX, a major play for both players. Then you have also Boss Energy that I already discussed. I think the honeymoon is going to be a major play for the future of uranium. Honeymoon is a project in South Australia, and again it's a top pick in the near term for Sprott Equity Research. For me as well, is one of my major positions. And don't always forget why we are also bullish on a specific, in this case in specifically to Boss, and we have a major upside on the exploration of the honeymoon project. And the bear traps report, this is where all started, right? This is just an update case, but the first case came out on the 5th of December, if my memory doesn't fail me. And this is where everything changed in the mainstream, because the bear traps report reached out to many people. They just did an update as well, where they put out why the bull case of uranium is so strong. We already discussed it here, so just stop this video and read the entire point. But I think this is important to just as a small reminder. Barclays also talks about the decarbonized future and why nuclear power it's important. And they point out especially many things, but the most important, I think, for the mainstream media and investors is the nuclear is becoming safer with the new technology, especially after what happened to Chernobyl and Fukushima. So it's also important to talk about safety, affordability, and of course the waste after the production. And again, as we saw in the previous chart, we have massive money coming into play, and this is just information about it. The New York hedge fund Anchorage Capital Group is one of them that deposit and bought nuclear and bought uranium. So this is something that's going to be more common, and this is just for information. Japan as well, with the Mihama nuclear power plant that come back online, so this is going to increase even more the demand for uranium. And as we have been discussing about honeymoon and the project of Boss Energy, this can actually build more momentum for the nuclear play as an whole. So don't forget, again, always about the staggering deficits in the supply demand. And this is the most important one for me. Although we have the fundamentals, don't forget where we are right now versus especially where we were in 2007. We were at $150 a pound uranium. We are at the closing on Friday at $32. So this is where we are right now, bottom right. This is where we want to be, top left. And it's still early, it's still really early to come into this uranium play. As we just said, Chamath Palihapitiya just realized it now for something that's been going on for years. And especially this is just an ETF of URA, again, where it was in 2011, where it is right now, slightly below $23. So thank you guys so much for watching this video, another video about uranium. This is my generation play, my decade play, and I will keep you guys updated. But don't forget, knowledge is not power, knowledge is potential power, execution is everything. And just like the markets, we will not rest.